So as long as numbers are fine on the ground here domestically, as long as the narrative in the US market, global market is fine, there shouldn't be any reason, any trigger for an immediate big crack coming in the market. But let's take the discussion with our friend Pawan Parekh, who's now joining us, along with Nuresh and Kunal also. Pawan, how are you doing? Long time. Good to see you in your new role, in your new seat. What's your thought on the market? How are you looking at how are you joining the dots right now in the market?
Hi Ajay, good to talk to you again, and good afternoon to your team as well. Honestly, on a lighter note, it's a crime to talk negative right now in the markets. But if you were to if you were to comment seriously on this market, I must tell you there are few pockets in the market which I think offer a lot of value. But on the other hand, I must tell you that there are a lot of pockets in the market wherein there is absolutely the risk reward is not favorable. The stock prices, the valuations have completely run ahead of their fundamentals, and surprising, a lot of these stocks are companies wherein there is practically zero institutional holding. It appears to be like very closely held stock, and the stock is rallying every day, every week, every month. So from an investor's perspective, they need to be really cautious about the kind of investment they're making in the market. And if you would take a macro view, honestly, there is nothing negative to say for the market, and that is perhaps one of the reasons why markets, directionally are just moving up. I think one of the positive points to look up is that the U.S. rate cut cycle is now very imminent. Perhaps I think that is one event which markets are looking up. So overall, I must say that one should consider to remain positive on the market. But then, every sector and stock position has to be by a bottoms approach, based on the merits of that company and based on the valuations of that company.
Good afternoon to you, Pawan. This is Cheryl also joining in the conversation. And actually, your commentary led me to the next question. You did mention there are pockets of value in the market. There are pockets where you are seeing where the risk reward are unfavorable at this point in time. So, which are those pockets where you can still find in value and the ones the opposite?
So I think, banking sector, BFSI is a space which includes not only banks but financial services and insurance. I think that is one sector which has underperformed for quite some time. I think the concerns about the mismatch between credit growth and deposit growth, and on the potential increase in NPA, I think that's very much in the stock price. Most of the analysts have factored that into their estimates now. And despite all of that, and because of the underperformance, I think the valuations are very reasonable, not only in the top-notch banks or financial institutions, but even in mid-sized small finance banks or NBFCs, and for that matter, even insurance companies. Beyond the life side, on the general side, I think that is one sector wherein we think risk reward is quite favorable, notwithstanding 1 or 2 quarters here and there earnings could slip. But I think once again that's very much into the investor estimate. The second sector where we find a lot of value is pharma. I think the sector has done very well. But I think Indian pharma space is in a very, very, very sweet spot, owing to a couple of factors. One, the risk of price erosion that was there at least 1 or 2 years back. That's not the case at all now. I think a lot of these companies in the CDMO space will benefit from China plus one story, and that will actually benefit the entire ecosystem. It will not be restricted only to one or two stocks. And the third sector, which I really want to highlight, once again, this sector has done reasonably well, but I think there's still a lot of value left out here, is in the power and industrial space. I think India is going through a very big cycle of capacity creation, not only on the private capex side, but also on the power side. If digital India, manufacturing India, consumption India has to do well, India cannot remain a power deficit country. And importantly, this sector is not dependent on government capex. A lot of this capex is done by IPPs, either on the PSU or private side. And the last thing that I think which one should consider investing is a rural theme. Now, this rural theme actually spans across multiple sectors, be it consumer finance. I think rural has been in distress for quite some time. If the monsoon is good this time, and post festive season, we could see rural theme reviving. So I think these are a couple of sectors where we feel very positive, both in terms of the opportunity going ahead and valuations. Both, I think it strikes a decent balance between risk and reward.
Those are the sectors that actually Pawan is looking at or look attractive, believes that there's some scope of up move still left in the power industry space, as well as the rural India theme. And given the fact that now we are inching closer to the budget, we'll have my colleague Prakash also to join us shortly to talk about the latest budget exclusive that he has. But before that, Naresh, Kunal, good afternoon. Let me come to you, Naresh, first. Pawan did highlight on the fact that he still sees some scope of up move or a better performance coming in from the power and the industrial space. What's your take coming in on the charts for the power space, which has already seen a very smart run up already, though there has been bouts of consolidation in that space now?
So across the board, we've seen a very strong move. So say NTPC, Power Grid, or something like even a CESC or a NHPC, SJVN, they've all done well over the last 1 to 2 years. The risk reward is no more as great. This used to be a favorite sector a couple of years back for me. But for now, the only space where there is still some risk reward in the left in the power space is to look at NHPC and SJVN, which have gone through a 6-month consolidation. The trend is still up, but the risk reward is not great. So currently, I would prefer oil and gas, larger names over power at this point of time.
I'd like you to say Mira.
All right, oil and gas also is looking good. Kunal, very good afternoon to you. What's your take? What exactly is happening when you talk about the banking space in particular, especially the PSU bank index? No doubt, yesterday some of them saw an up move towards the last 1 hour of trading session. Some of them led due to good earnings coming in as well. But today the picture is a little different. Do you think this sort of differentiated move or a volatile move will be the name of the game when it comes to the PSU banking space, or do you think is just a one-off?
See, I think clearly Bank Nifty is underperforming over the last 2 weeks, and we break it down to two parts. For the banking index, the private sector banking names, where there's been a lot of high-weighted stocks, but then again stocks which have been grossly underperforming over the last 2 to 3 weeks. The likes of HDFC Bank caving in almost 10% from the recent highs. Then you have more of a plateaued performance coming from the likes of ICICI Bank, Kotak Bank, IndusInd Bank, as well as many of the other mid-cap peers of the private sector banking names. So that is one pocket where the underperformance is still there, and there are no major price actions which has come back into the private sector banking names. Now on the PSU banking stocks, yesterday we saw the stocks showing signs of some recovery for themselves. But I maintain the stance yesterday also that these stocks need to see a follow-through up move, because ideally we've seen these stocks going into a one-day uptrend. Immediately the trend fizzles out, and then these stocks go into a corrective phase yet again. So I think what matters over here is now if these stocks can break past above yesterday's high and by a margin of at least a couple of percentage points further, that could be a trigger point that these stocks have started off an uptrend for themselves. So I think I would probably expect the Bank Nifty to remain a bit more sluggish from here on, but I think the PSU banking stock starts to perform very well, and if these stocks manage to break past above yesterday's high, I would believe that the trend could kickstart again.
In fact, there is clearly some interesting moves happening in select PSUs like never before. We spotted ONGC just a few days back with Kunal. Now it's at a 13-year high at 327 and thereabout. MTNL, nobody ever spoke about it, and whenever we are talking about telecom revival, we only spoke about Bharti, Vodafone, maybe some of the few other stocks, Hexacom and all. But MTNL is actually a 13-year high. So that's something happening. Pawan, I want to talk to you about some of these PSUs. Which are the ones which look good to you? As in, at least the categories. Give us in categories.
Right. So I think very clearly within the PSU space, we find PSU banks to be quite attractive. But having said that, I would just like to highlight whatever sectors that we discuss, you will find some stocks in bubble zone in all of those sectors. So just to reiterate, within all of those sectors, you need to find a good bottoms up ideas. Only then, investors would make money. Coming back to the argument on PSU banks, I think we find them pretty attractive. But at the same time, one should be cognizant of the fact that some of these PSU banks have very high exposure to the RAM portfolio, those rural and agri portfolio. So while we expect the rural theme to do good, but at the same time, one should be cognizant of the fact that there is this lot of noise around, loan waiver and things like that, which could actually, while it could do good to the demand, but it would not augur well for a lot of these lending institutes. So companies which have got very high exposure to RAM portfolio, especially in states which are more vulnerable, you need to be cautious there. But as a pack, as a pack, PSU banks seems to be in a very decent space. The risk reward is favorable. Valuations are still not very expensive, and they would continue to grow between say about 9 to 12% across PSU banks. So I think that is one piece within the PSU space which looks pretty exciting to us. Honestly speaking, defense as a sector looks very promising to us. I think there's been landmark shift in the way this sector has been shifting. Very recently, we've had this fifth round of indigenization list which has come up, and more importantly, last 2 years onwards, we are looking at major exports as well. But once again, here valuations are something which are not very comfortable.
Right.
Apart from that, I would want to say, I would not hesitate from saying a lot of these PSU stocks are in bubble zone, and
Okay.
I'll be very.
Pawan, which in your mind would be the highest earnings growth sector from here on? Because eventually whatever PE expansion had to happen in the market may have already happened. Now the performance of a stock will hinge on whether earnings are able to catch up or not. So which are some of the areas where you think earnings can be very quick and fast?
Right. So I think we just discussed a couple of sectors. I think pharma is definitely one sector, because if you look at a lot of these pharma companies, all of them have got few blockbuster molecules in the pipeline, which will lead to some very sharp revenue growth for all of these names, not only for this Q1, but at least for next 1 or 2 years. So pharma is definitely one sector which is on top of my mind. Within industrials, if you actually look some of these sectors like renewables, some of these subsectors like automation, these are companies, which will benefit not only from revenue growth, but also from substantial improvement in margins because of the operating leverage that they're seeing. And I think, not specific to Q1, but, going ahead, take a 1 year, 2 year view. Telecom is one sector which I think will see multiple tariff hikes. So that is one sector which will once again see a very sharp up move in earnings very clearly. And I must tell you, a lot of these sectors, while they witness sharp growth in the earnings, it will also coincide with a decent amount of cash flow generation.
Right, talking about actually telecom, very interesting development with regards to telecom, where one side you have Vodafone Idea shares that are seeing good up move, where reports suggesting that Supreme Court will be hearing the case on the AGR dues. On the other hand, take a look at what Reliance Industries is doing actually. That particular counter has seen the biggest drop in almost a week or so, because you have the analysts that are actually expecting a risk of higher competition for the company's telecom unit. In fact, you have Macquarie that's saying that for Reliance, a more active three-player market represents downside risk to consensus subscriber addition estimates. So keep an eye out on Reliance Industries. That also could be one of the reasons that the stock is under pressure in trade today. But Ajay, it's been very amazing to see how the entire telecom space is revived, isn't it?
So after 5 years,
Yes.
5 years, the tariff hikes actually coming in, and there is reason for some section of the street to believe that there could be another hike. This is not the final hike. It will happen with a 6 months gap. While many other sectors in the industry, peak performance of earnings may be behind them, they flatten out or decelerate a bit. This is one sector where the earnings are likely to accelerate because of tariff hikes after 5 years. And ownership wise, either most of them have Bharti, that's why it is at 1500, or indirectly have Reliance, or some increased exposure in Vodafone now. So this is something. What about telecom, Pawan? Which end would you like to have it as a resurrection play, or an established company, or as a part of another larger giant?
I think at this point in time, it makes more sense to play the resurrection play, for the simple reason that if the Indian telecom industry were to see multiple tariff hikes, mind you, before we get into this, Mr. Bharti Mittal has on multiple occasions for many years has been highlighting that the industry needs at least 300 ARPU. So the last reported ARPU is closer to 210, right? So we still have a 90 rupees up move, which is a good 50%, less than 50% up move to be seen in next 1 or 2 years. So if the entire telecom industry were to benefit from such a sharp increase in ARPU, it makes more sense to have a dedicated play on telecom, one, and secondly, companies which will be the key beneficiaries of this ARPU. So some of the companies in this sector, while I cannot say stock specific, but some of the companies in this sector, telecom sector, have got either exposure to international telecom or non-telecom businesses, or maybe say non-retail businesses like enterprise and things like other, or maybe they are part of a big umbrella. So it makes more sense to play dedicated India theme. And I think one more thing that needs to be highlighted here is that despite we are talking about 5G, but a good about 20% or more of the Indian telecom user base is still in 2G. Now, as in when that 2G base migrates into 4G, 5G, there will be an organic growth in ARPU, which will benefit a lot of these telecom companies, So I would actually rather play dedicated India play and companies which will benefit from the shift from 2G to 5G or 4G.
You coming in on the telecom play, and hopefully, Ajay, very soon we will have a new ARPU number that we'll have to hear from all these telecom giants, because they've been waiting that the ARPU in the long term should reach 300. Hopefully very soon that will be reached. I don't know how the consumers feel about it, but nevertheless, the telecom top bosses today met the Union Minister Jyotiraditya Scindia today. Let's exactly hear out what the telecom minister had to say post the meetings, what was discussed.
Today we've had 3 advisory committee meetings, which are the balance from yesterday. One on the ISPs, the second with the telecom service providers, the telcos, and the third on academia and R&D. We've identified a rather deep agenda for all 3 committees. Now, the members of these committees and us will be working together. There are varied schedules for the first presentation of these committees over the next couple of weeks. And then we will be taking each individual issue at a time, delving into the details and devising an action plan with clearly timelines and actionable items so that we can take our sector forward. These 6 committees are the backbone of the communications sector in India. And by forging these committees, we hope to take the sector forward, realizing Prime Minister's goal of creating not only an Atmanirbhar Bharat, but a telecom superpower within India that will hopefully transcend our boundaries in the days to come.
Right. So that's kind of a slice of the conversation which Minister and the telecom companies had. But talking of a superpower, India is also aiming to become a defense superpower. From the largest, one of the largest users of defense hardware, now they want to become Atmanirbhar. But we'll not talk about the dockyards. We'll talk about some other stocks like HAL, BDL, and Zen Technology. That one is a small company from Hyderabad doing some interesting stuff. Pull up those stocks. How are you playing the defense theme, Pawan? Are you interested in it? Do you have it in your portfolio? You already played it, so trimming some.
So we have already played it in my earlier role, honestly, and in my current portfolio as of now, we are not owning too much of defense. But I must tell you, and the only reason why we're not owning defense is because we're not very comfortable on the valuations. A lot of these companies are trading at very phenomenally high valuations, some sort of that we've not seen in many, many, many years. But having said that, if at all we get a good correction, we'll be buyers into the stock. I think this story is a multi-year story for us. I think India has very clearly shown that India needs to be Atmanirbhar in defense. And this is clearly visible in the consistent efforts that the government has been doing both on the indigenization side, which is actually to some extent substituting imports, or making more of a collaborative approach wherein India is also benefiting, not only doing offset work, but there's some sort of a technology transfer that's happening to the domestic players. And on the other hand, I think very clearly the government is committed to export. And I think time and again, we are displaying that by striking deals with Southeast Asian countries and few other African countries also. So I think this is a multi-year theme. It is no longer a sector of the past wherein, you didn't know what is supposed to happen out here. But once again, valuation is something that we're not very comfortable. So we'll chip in at the right time, but nothing for now so far.
All right, chip into the right time in the defense play. The valuations for now seems to be a bit of a concern is what Pawan has to say. But Pawan, on that note, thank you so much for joining us on the show and sharing your views coming on the telecom space, the rural theme, as well as also talking about defense in there. Thank you so much for joining us on ET Now. But time for taking closing trade picks coming in from Kunal as well as Naresh. And Kunal, you go first. Which is the stock that's made to your list today?
So that will be HUL. We discussed the stock, I think a couple of days back, also mentioned 2850 as a potential target for the stock. It's done pretty well for itself today, up by almost 3% so far. So the stock looking attractive at current levels of 2700. Would look out for targets in the range of 2850 for HUL.
All right, and Naresh, what's your closing trade? HUL it is for Kunal.
So that would be a buy on LIC of India Life Insurance Corporation. The stock has finally broken out of a 3-month range. Also, the sector looks promising, so LIC could be on track to make a new all-time high.
Speaking of a consumer stock, Kunal, pull up Gopal Snacks. Gopal Snacks made a low of 321 odd, 300 actually, and after that is actually rising in a very nice manner. Pull up the last 3-month chart. Gopal Snacks at 341, higher by 5%. How does it look on the charts?
Yeah, Ajay, actually the concern is the history is a lot more limited for the stock. It's only just 4-5 months of price history for the stock. But even in this last 4-5 months, what we can see is the stock making a high initially of 390 plus levels, coming back to 300, and then now it's just stabilizing in the midpoint of this 90-point range. So which means that what we are looking out for is that the stock has come back into the neutral territory. Typically over here, what we need to see is that which end of the volumes the stock starts to see up higher. If we see the stock moving up to say 350, 360 levels, and the volumes in the subsequent days starts to shoot up higher for the stock, that's where we look out for stocks getting into a breakout and ending this neutral zone of consolidation. So maybe another couple of days of strong volume action could probably lead to the trigger on the upside.
Actually, it was the IPO came at 400 bucks and then fell to 300 after the IPO, and now is on a recovery path. We'll watch out for the earnings from here on.
If you like this video, then like, share and subscribe to ET Now.